I bid you all good morning, good evening, and good night, wherever you may be watching this transmission. It is I, Mike Martins. Guys, I want to read this gold article for you guys because it's really important. It's by World Crunch. I've been reading from these guys for a while now, translated from Google Translate, because the articles are usually written in German. And you get some really good advice from these guys. Really good, solid gold advice, if that makes any sense. I'm trying to be funny. I'm not a funny guy. Anyways, so let's go. Gold rush as investors recoil from COVID-19 shock. With traders spook, physical gold that you can hold in your hands is being traded for high markup compared to the market price for gold. What is that trying to tell you? That the people are paying over spot. And for good reason. Nobody cares what the futures market is saying. Nobody cares what the market say the price of gold is. People are willing to pay for physical gold you can put in your pocket and walk out with it. And take it home and put it in storage. I like to call it the black market bullion. People will create a private price. They couldn't care less. Oh, it's trading for 17. I don't care. What, it's trading for 15.25 today or 15.40? I don't care. I want too large for my gold. I want $2,000. I don't care if it's trading for $500. I want two for my gold. So that's what's happening. And you guys remember 6-7 months ago when I spoke to Shanghai Larry, we were discussing this issue where in China 6-7 months ago, I have the video. I made the video way back, and he was telling me that the government was issuing people or telling people to buy gold and start investing in gold, right? And people were buying gold 5 to 10% over spot. They didn't care what the market said it was worth. People were buying it and acquiring wealth. They didn't care what the market was saying it was worth. So they were buying over spot, and a lot of gold and bullion dealers shut down. So this is from today's article. So this is from Berlin. It's not just toilet paper, hand sanitizer, pasta, and flour that people are stockpiling during the COVID pandemic. Germans, we have seen, are also flocking to buy gold. Plummeting and volatile stock markets may be bringing down the price of precious metal futures. But when it comes to actual gold coins and bars, it's a different story. Yeah, when it comes to actual physical gold, black market gold, if you want to call it that, it's a different story. Physical gold that you can hold in your hands and take home with you is already being traded for high markup compared to the stock market price for gold. The stock market price, or paper gold prices, refers to futures that are traded in the City of London, for example. So people don't care what that says. For investors in precious metal, the pandemic has brought about an enforced break. Over-the-counter trading of gold and silver has grounded to a halt. We have closed all our branches until further notice. Marcus Krall, CEO of DECLAIMER. He says his company closed its doors before the official shutdown notice from the government, and it was only fair. We have people standing in long queues. And that's not what you want in this kind of situation, Carl explains. Although the pandemic will, in all likelihood, drive the global economy into a recession. It has caused a rise in customers for precious metals traders. At the beginning of the week, just before the shutdown, Proarium reported a peak in revenue in its branches. They said that their sales had smashed the previous record set at the peak of the Euro debt crisis in 2011, if you guys remember that, increasing it to almost half. Dugausu CEO Krall also reported the dramatic rise in branch sales. On average day in 2019, he said, they sold around 100 kilograms of gold in their branches. Just before the shutdown, they were selling more than 5 times that amount. Wow. Not all essential shops in Germany have closed their doors. Trade has moved online. The shortage of physical market is taking its tolls. So it's taking a toll on the physical market because there's not enough gold out there. And then especially people that get these paper things that say you have 1 ounce of gold in Deutsche Bank, just come in and you bought it at this price on this date, stamped and sealed, delivered. Here you go. You go cash it in, and they tell you they'll mail it to you. Good luck with that. Almost all gold traders sell gold coins and bars online. However, they are now experiencing bottleneck with delivery. And this shortage in the physical market is taking its toll. The agio, the markup, the buyers pay on gold coins and bars compared to paper gold futures has shot up. For the most popular gold coin with German investors, the Krugerrad, which contains 1 troy ounce, 31.1 grams of gold, the agio is around 12% before the crisis. It was 3 to 4% in the middle of the week. And Krugerrad cost between 1,520 and 1,540 euros for more sellers. Buying 1 ounce of gold in the futures market would cost around 1,375 euros. Now look at the exchange. Look at that. 1,375 if you buy it on the futures market. 1,375 should be like 1,550 American, I think. And then now, but it's selling. But the Krugerrad, the cost is between 1,520 and 1,540 euros. So they couldn't care less what it's trading. It's a black market bullion. It's a black market gold is what it is. They're going to create their own price, and if people want to pay that, go ahead. You don't want to pay it, somebody else will. The markup is even higher for smaller coins. For a quarter ounce, it could easily reach a fifth of the futures price. The shortage is being exacerbated by the fact that even established organizations are experiencing difficulties with delivery. The Bavarian State Bank and the biggest precious metals trader in southern Germany has suspended all gold trading because of the unclear situation around production and delivery. So here it is here. They're them bending it for some reason. The problem is that European production of gold bars and coins is centered in Ticino, Switzerland, Ticino, Switzerland, which has been hit especially hard with the virus. There has never been this kind of interruption to delivery, according to the Bavarian State Bank. They say that around 2/3 of the precious metals they sold were produced in Switzerland. Given the severity of the crisis, people are surprised that the stock market price of gold isn't going through the roof. Carl has an explanation. The stock market price of gold is going down because investors and sometimes also family-run businesses are having to liquidate their stocks. So that's what's happening there. People are buying gold like there's no tomorrow, in quotations. So if people are liquidating their stocks, obviously you're going to see a drop in some of the junior miners. Junior miners will get hit hard because a lot of people want to take that risk, that rush. You know, I invested quite a bit in junior miners, but I'm out now, right? They are selling precious metals in order to have enough cash flow to see them through the crisis. There was a similar trend after the collapse of Lehman Brothers in 2008, when the margin call forced hedge funds and other major investors to dump all their stock into the market. With savers, it's a different story. People are buying gold like there's no tomorrow, says Krell. At the time of his statement, De Gusa was still delivering almost all denominations of gold coins, partially enabled by the fact that they have their own refinery, but logistically were struggling. If to see any further hitches, he admits. Closing down branches means that savers will have to wait a few days before they receive their gold coins and bars, and delivery costs are making it more expensive to buy them. Some people are also nervous about the lack of anonymity compared to buying in a branch, as ordering online means they have to give their home address. It gets lost in the mail. Despite all this, gold is having a historic resurgence in addition to their desire for security. There is another reason to increase the amount of gold in your portfolio. It's hard to predict how this crisis will affect the financial system in long term, and even before the COVID, the gold standard was an important benchmark for all other assets. Over the last 30 years, gold investments have paid out better than stock shares. The opposite is true for silver, which in 2020 is almost as far as the red as the stock market. Far in the red as the stock market. So this is by our friends over at World Crunch. I used to read this, but I used to translate it from German. But it's really good to see that they're finally... the best international journalism finally in English. It's about time that they've introduced their articles now in English. I was reading articles from this like in 2009, 2010, where people were going to Deutsche Bank or other banking systems to pick up their gold with their gold certificates, and they're telling them like, oh yeah, we'll mail it to you, sure. And people not getting their gold. Yeah, there was a big issue, and I don't know if they even resolved that. I think they just swept that under the rug, you know what I'm saying? Anyways, guys, don't forget to subscribe to the channel. Don't forget to be part of the channel. Don't forget to share this video. Get it out there. Black market bullion prices. Black market gold. Let me know what you guys think. To heck with the futures market and what they say. If you're willing to pay this much, go ahead. If you're not, somebody else will. And there always somebody else will be paying more over spot. Let me know. Have you ever purchased over spot? Are you willing to purchase over spot right now with the situation of the bottleneck with physical gold and even silver? Let me know. Mike Martins here. Thanks for watching.